Hello everyone, today I'm going to discuss on whether Chinese stocks are a good buy or good buy. Say if you're an investor who has got US stocks in your portfolio containing world's top companies like Apple, Google and Amazon and are looking at diversifying elsewhere, naturally you will look at the other economic powerhouse, which is China. China is a huge market with enormous potential. They have many huge and very profitable companies that can rival US firms, such as Alibaba, Tencent, Baidu, just to name a few. Personally, I believe there are big growths and opportunities in Chinese stocks. Some even say investment opportunities in China are too big to ignore. So in this video, I will share the risks and my personal views on Chinese stocks, which you can use as reference or consideration before investing in them. As usual, before I dive into the details, hope you can give this video a support by tapping on the like button. Your little support means a lot to me. First up, regulatory pressure. The last 2 years have been eventful for Chinese stocks that are traded on the US and Hong Kong markets. The Chinese government have embarked on an unprecedented clampdown on various large companies, and this move has spooked many investors. The casualties include some of China's leading tech companies. Some examples are as follows. In late 2020, Ant Group IPO was halted, and its founder Jack Ma was invited by the Chinese government to Lim Kopi, in other words, for an interview. During this period, Jack Ma also went radio silent for a while. Then, in 2021, Alibaba was fined 2.8 billion during Chinese antitrust probes. Other tech giants that were fined include Tencent in the music and gaming industries, Baidu in the search industry, Meituan in the food delivery sector, and Pinduoduo in the e-commerce segment. Next, ride-sharing app Didi has been the biggest victim under China's data security probe, as the cybersecurity watchdog ordered the company to remove their app Didi Chuxing from app stores over data protection concern. Can you imagine you have to stop registering new users and remove your app from the app stores? Moving on to the education industry, China banned for-profit tuition companies as they opine that tutoring should be done on a non-profit basis. They mandated that several public traded education companies change their status to non-profit organizations. Some say it's to reduce stress on children, which is a good move. I think a lot of Singaporeans are hoping for this to happen here in Singapore. Anyway, this move saw the stock prices of online private tutoring companies like New Oriental Education, TAL Education, and Gaotu plummeted by more than 80%, to a point where I don't think they will ever recover. As you can see, many sectors were affected such as fintech, e-commerce, social media, gaming, music, ride-sharing, and even education. Though the official justifications and intentions are good, these events weren't good for investors, nor did they build confidence in Chinese stocks. The next risk is delisting of stocks. Political tensions between the US and China means there is a risk that some stocks listed on the US market will be forced to delist. In case you are not aware, foreign companies listed on US need to be audited by US-approved auditor. China may not feel comfortable with the US folks probing deep into their big companies, as they may get hold of data that are sensitive in nature, or maybe to a certain extent threaten the security of China. On the other hand, the relevant authorities in the US has also voiced concern over a lack of access in China, especially after the fraud of Luckin Coffin, where the largest coffee chain in China was found to be fabricating its sales records. To also highlight, there is a bill that would allow the US Securities and Exchange Commission (SEC) to suspend companies from trading if they do not comply with audit rules. Anyway, even if it's not for auditing reason, there are still companies which may want to delist from the US market on their own accord. One recent example is Didi, where they reviewed their plan to delist from the New York Stock Exchange after careful study. This came less than 6 months after its initial public offering. Some say the move is likely due to pressure from the Chinese regulators. Personally, I feel that some of the moves made by the Chinese government are right, such as prioritizing well-being of parents and children above businesses, and also antitrust probes to prevent monopolization and many others. The only issue is that these moves may not turn out well for investors. But as shared in the opening of this video, China has some great companies, and there is no denying that China's growth has been impressive over the past 2 decades. So my view is that if you are a risk-adverse investor who doesn't have the appetite for high volatility and massive short-term drawdowns, you may want to avoid the Chinese stocks altogether. But if you are an investor who is willing to take calculated risks, you may closely monitor the situation in the coming months, as regulatory crackdowns may be extended into 2022. You may consider loading up small positions, as many beaten down stocks seem like a compelling buy at its current levels. Alternatively, you may also look at buying stocks that align with China's strategic goals, such as AI, semiconductors, 5G, and green energy. Or invest in companies like search giant Baidu or e-commerce giant JD.com, as they seem to be in the Chinese government's good books. All in all, just be ready to be in for a long term. Think 10 years and above, as stocks for companies with good fundamentals tend to go up over a long period of time. In the short term, be prepared for Murphy's Law, which is anything that can go wrong will go wrong. More importantly, invest only what you can afford to lose. In fact, I feel these pointers are applicable to stocks on the US and other markets too. Alright, that's all for this video. What are your thoughts on Chinese stocks? Are you already invested in them? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.